So this week we've had something come up quite a few times because we've had a few clients that it's become relevant for, and I've seen some chatter online about it, and that's called qualified small business stock. It's otherwise referred to as Section 1202 by CPAs and other tax professionals, but this is a gem in the tax code. And basically what it is it's used to sell business. When you sell stock, you can get up to a $10 million tax-free capital gain. It's pretty amazing. And people that have done it in the past typically never do anything but this. After they've done it the first time, when they find out that they save like $3 million of tax, typically they do the rest of their deals, the rest of their businesses with qualified small business stock. So it's a gem of the tax code. I wish more people would do it. You have to plan in advance because you have to be a C corporation for 5 years to qualify for it. You can either form a C corporation when you start, or you can take an LLC, S Corp, something of another form, and convert it to a C Corp when you want to start that 5-year window. But you do have to be a C Corp. The C Corp's assets also have to be under $50 million at all times, so you have to kind of manage that and be careful with that. It has to be an active business, and it has to be active when you sell it. So that's usually not a problem for most people, but just something to keep in mind. It can't be a service type company, and there's kind of a list of the type of companies it can't be. But for instance, like I couldn't do it as a professional service provider. Things like hotels, motels, restaurants can't use it, but things like manufacturing, distribution, retailing, tech companies, tech startups should absolutely be using this part of the tax code. Again, you have to hold it for 5 years. The gain that's can be excluded from capital gain or taxation is up to $10 million, and it's just a great gem of the tax code. Now, another thing you can use it for is attracting investors. You attract investors and tell them that they can get a capital gain that is tax-free. That's a really good way to get people interested in your company, especially ones that have invested in other things like VC firms, angel investors, things like that. It's a big attraction. And then rewarding employees too. If you give employees stock that is qualified small business stock, when you exit, they get that tax-free, and that's awesome because that's not a nice surprise sometimes when people exit from a company when they've gotten some of that sweat equity stock. So anyway, if you don't know about qualified small business stock, you should learn about it. If you have a current company that you might be exiting in the next 5 years, you should look into maybe converting it to a C Corp. If you have any questions about this, either call me, call us at Credo, or send us an email. And then last thing I'll say is that the last week I sent out something about the Small Business Administration and acquisition loans, and we're actually working on a longer video that takes a deeper dive into that, so be on the lookout for that. That's going to be coming in the next week or two. All right, thanks. Have a great weekend.